It's Tuesday, January 10th. This is a pre-opening SPY report about an hour to go before the open. And you can see here after yesterday's red shooter bar, that was an attempt to break out of a long-term trading range that we had identified and then closed near the low of the day. We are following through to the downside as anticipated. You can see the pre-market action is here, the low end of its pre-market range. So we're going to have to play the downside today. And I wouldn't call it the expectation, but the scenario in play is that we failed to break out of this big range to the upside, and now we get the shooter bar and the follow through. So now you're going to play the scenario that you're going to come to the bottom of that range, and you want to see price action kind of prove that that's happening. In order for that to take place, as we kind of gap lower today and make a new 2 down day, we're going to want to first see directional movement that kind of goes, that moves lower past this purple line. The purple line is the monthly chart open. And we've been talking about how with this red bar from last month, you kind of expect the lows of that bar to at least be tested. I don't know how much follow through you're going to get, but if we do get follow through, then you have another target down here. So we want to turn this monthly chart red, and that happens below the purple line. So today, any movement lower, we want to see if we get the follow through that kind of, has a directional move below that line. That'll be the first sign that we're failing on this range. So we're going to look for signs today, both today and in the coming days, that we are failing to the upside and going to the bottom. And today, directionally, since we're going to gap a little lower, I'm not saying right out of the gates we're going to go red and go straight down. We might get a little bit of a green to, move first, maybe somewhere up here, and then roll over to the downside. You never know how price is going to open, but we'll see that. But as long as we stay below the midpoint of yesterday, and, as long as we stay below the pre-market highs, then you're biased to the downside. So we're going to look for various setups to the downside. And again, you're in this little gap area here. You can see between the high of this bar, low of this bar. So it's possible that we're just filling, we try to break out with a shooter bar, but we're just going to hold in this gap area, which is kind of near the open of the month. And maybe with the CPI data, the market's just digesting and waiting and not really wanting to go much, either up or down. And maybe by the end of the week with a good number, we kind of hold somewhere in here, don't really get to the bottom of the range, and then boom, you get the breakout to the upside. But the scenario in play for a while has been, this big down move that happened within 5 days. It kind of consolidated for a long time. So you were kind of looking for another push down. And maybe in this case, it was after broadening to the upside. You're going to then, the higher highs here, then that's going to lead to the lower lows. And then there's some targets, along the way down here. So we'll see what happens. Price action will, as always, will lead the way. The type of open we get, the first 15-minute bar, how it relates to that pre-market range. But we definitely, bias to the downside, looking for downside setups, and then seeing how much follow through we can get today. Again, playing the scenario in our mind that we're going to be failing the top of that range, going to the bottom of this range, but we're going to want to kind of get verification of that with price action. So let's see how things open today, bias to the downside until something, changes price action wise.